Bitcoin just got slapped down from $65,000. XRP is down 43% this year. Ethereum's foundation is cutting its budget by 40%. And somewhere, quietly, Stellar is paying people's salaries in real time. So, is crypto dead? No. It's just doing what it always does, scaring the weak hands out before the next move up. Welcome back. I'm going to give you the full picture in under 9 minutes. What's crashing, what's building, and where the actual opportunity is hiding in plain sight. Let's go. Let's start with Bitcoin, because Bitcoin is currently going through what I call its breakup phase. Painful, public, and honestly kind of expected. BTC bounced off $58,000 support, looked like a recovery, then got absolutely demolished when sticky inflation data dropped and triggered 427 million in long liquidations in a single session. Traders who were leveraged long gone. And here's the kicker, June 2026 is now officially the worst month for Bitcoin ETF outflows on record. Over $3.6 billion has walked out the door. Now I know what you're thinking. Should I sell? And my answer is, that depends entirely on whether you understand the difference between price and value. Because while retail is panic selling, Michael Saylor just bought another 520 Bitcoin for $35 million. His company's stock hit a 52-week low. His STRC notes are sliding, and he keeps buying. Now, is Saylor delusional? Maybe, but he's also been doing this since Bitcoin was $9,000. So before you call him crazy, at least check the receipts. Cathie Wood says global instability will ignite the next surge. Grant Cardone is redirecting real estate cash flows into Bitcoin, and Congress is actually moving to ban the digital dollar, which counterintuitively is bullish for crypto because it removes the government's main competitor from the field. Bottom line on Bitcoin, we're in a shakeout, not a funeral. Here's the thing nobody in the panic crowd is talking about. Bank of America, one of the most conservative banks on the planet, is now recommending crypto allocations to its wealth management clients. Let that sink in. The same institution that used to treat Bitcoin like a punchline is now telling high net worth clients to get some exposure. Japan's SBI Holdings just agreed to acquire crypto exchange BitBank for $288 million. Sharplink Gaming came back after 8 months of silence and bought 5,000 ETH in a single move. When institutional money goes quiet and then comes back in size, that's not random. That's accumulation. And accumulation at the bottom is how wealth transfers from the scared to the patient. Okay, I need to talk about the story that got almost zero coverage, and it might be the most important one of the week. Zbeck is using Stellar XLM to power real-time global payroll. Think about what that actually means. Workers anywhere on the planet getting paid instantly in any currency across borders without waiting 3 to 5 business days like we're living in 1987. No middlemen, no wire fees, no allow 5 to 7 business days. This is blockchain doing something real. Not speculation, not a meme. Actual infrastructure solving an actual problem for actual humans. Stellar has quietly built one of the most underrated enterprise utility cases in crypto, and Zbeck just gave it a major real-world deployment. If you're sleeping on XLM because it doesn't have flashy marketing, that's exactly the kind of thing that bites you later. Meanwhile, X-Money launched full peer-to-peer transfers and debit cards across 20 plus countries. Yeah, whether that integrates crypto rails or stays fiat native will determine how big a deal it becomes. Either way, the payments infrastructure is being built right now. Let's run through the rest fast. XRP, down 43% year to date, currently trading at $1.04. If you believe in XRP, this may be a buying opportunity to DCA. But Ripple's stablecoin RLUSD just crossed $801 million in supply, officially flipping Ethereum's stablecoin ecosystem. They just got approved by Japan's Financial Services Agency, and Ripple reported a 2,200% surge in tokenized assets. The token price is lagging the fundamentals. That gap closes eventually. Either the price goes up or something is seriously wrong with the business, and the business looks fine. Ethereum. Vitalik just announced the Ethereum Foundation is cutting its budget by 40%. Everyone freaked out. I'm not freaked out. This is what financial discipline looks like. Ethereum isn't broke. It's adulting. Meanwhile, bearish positioning in Ethereum futures is actually contracting, which historically precedes a price recovery. Cardano joined the Legal Context Protocol alongside Google, IBM, and Circle, a new open standard for AI-driven legal transactions. Nobody talked about this. It's important. Solana just launched an ETF in Kazakhstan, first domino in a bigger global regulated rollout, and Shiba Inu moved 281 billion tokens in 24 hours, which means something, possibly nothing. Maybe volatility is coming. Don't bet your mortgage on Shiba Inu. Ever. Real quick, the macro environment matters. Here's what you need to know. Central bank gold reserves just hit a 50-year high. The world's most powerful financial institutions are hoarding hard assets at a pace we haven't seen since the 1970s. Ghana is buying 30% of its miners' gold output. This is a global signal of distrust in fiat systems. That same narrative, governments can't be trusted with money, is exactly what Bitcoin was built for. The SEC delayed tokenizing stocks. That's actually a relief. Rushing that without proper infrastructure would have been chaotic. And the Clarity Act, the big stablecoin bill, is sitting at 50-50 odds of passing before the Senate clock runs out. Regulatory clarity is still the single biggest unlock for the next major bull run. We're close. We're not there yet. The verdict, not financial advice, and always do your own research. Okay, here are some things to consider. Bitcoin, do not panic sell into a support test. If anything, dollar cost average. Sailor buying at these levels isn't a coincidence. Ethereum, smart money is accumulating. The budget cut is discipline, not distress. Buy the boring, hold through the noise. XRP, the fundamentals are outrunning the price. Hold, let the market catch up. XLM, the Zebek payroll integration is the kind of boring, unglamorous utility that becomes a moat. This is a long-term sleeper. ADA, the legal context protocol story is underrated. The wallet exploit was painful, but not a protocol failure. Patience. Shiba Inu, or other meme coins, highly speculative. If you must play, play small. Like, money I would have spent on a dinner I didn't need small. And here's the single most important thing I want you to take away from all of this. The assets that survive bear markets and lead the next cycle are the ones with real utility, real adoption, real problems being solved. Zebek, paying workers in real time. RLUSD, moving through Japan's regulated system. Bank of America recommending crypto to grandma's wealth manager. SBI acquiring a crypto exchange for $288 million. Those aren't hype. Those are foundations. The price chart is noise. The infrastructure being built right now is the signal. That's the full picture. Bitcoin shakeout, institutional accumulation, real utility building quietly underneath the panic. If this helped you see the market more clearly, hit subscribe, drop a comment with the asset you're watching most closely right now, and share this with someone who's about to make an emotional trading decision. I'll see you in the next one. And remember, the people who got rich in crypto weren't the ones who sold at 58K. Peace.